Welcome back to Ticker Shock, your deep dive into the market movers. Today, we're asking a provocative question. Can a breakthrough drug, one designed to tackle the global obesity epidemic, still crash and burn if patients, if they just can't stomach it? That's the bitter pill investors in Viking Therapeutics are trying to swallow right now. Less than 48 hours ago, the biotech world, and specifically shares of Viking Therapeutics, ticker VKTX, got hit with a gut punch. The company released data from its crucial Phase 2 trial for VK2735, their eagerly anticipated oral weight loss pill. Now here's the kicker. The drug did show impressive efficacy, with patients on the highest dose losing nearly 8% of their body weight in just 13 weeks. That's comparable to some of the injectable GLP-1 heavyweights out there. But here's where the market got indigestion. A whopping 20% of participants dropped out of the trial, primarily due to gastrointestinal side effects. To put that in perspective, the placebo group only saw a 10% dropout rate. This high attrition rate, driven by issues like nausea and vomiting, sent a clear, unsettling message to investors. Viking stock plummeted a staggering 19% in intraday trading, and it just kept falling. So, who exactly is Viking Therapeutics? They're a clinical-stage biopharmaceutical company headquartered in San Diego, focused on developing novel therapies for metabolic and endocrine disorders. Think diabetes, NASH, and, of course, obesity. Their pipeline is their lifeblood, with key candidates like VK2809 for liver disease, VK5211 for muscle wasting, and the star of our show today, VK2735 for obesity, which comes in both an oral and subcutaneous form. Here's the critical part for investors. Viking currently reports zero revenue. That's right, nada. Their financial future is entirely speculative, based on the successful development and eventual commercialization of these pipeline drugs. We're talking about forecasted revenues jumping from $0 to $35 million in 2026, and then skyrocketing to over $430 million by 2028 if everything goes perfectly. Their EPS? It's currently negative, with increasing losses projected through 2027 before a hoped-for improvement in 2028. Wall Street analysts actually had a consensus buy rating on VKTX before this news, with an average price target of $75. That shows you the sheer potential they saw. Now, let's get into the nitty-gritty. How does this Phase 2 trial news translate to Viking's bottom line, or rather, their future bottom line? Remember, they have no current revenue, so this isn't about an immediate quarterly hit. This is about derailing the train before it even leaves the station. The high dropout rate for the oral VK2735 program directly impacts the expected value and probability of achieving those massive future revenue forecasts we just talked about. This oral formulation was a cornerstone of their growth strategy, a major differentiator in a crowded weight loss market dominated by injectables. So, how do we quantify this? We're estimating a significant -25% reduction in the projected future revenue potential specifically attributable to that oral VK2735 program. This isn't a current revenue decline, it's a haircut on what they could have made down the road. Now, here's where operating leverage comes in. As a clinical-stage biotech, Viking has huge fixed costs. Think massive R&D expenses to run all these trials. This means a relatively small change in future revenue prospects can have a disproportionately larger impact on their net income, or in Viking's case, their net loss. We're using an operating leverage multiplier of 2.25. So, that -25% hit to future revenue potential, multiplied by our 2.25 operating leverage, gets us to a -56.25% impact on their future earnings potential. What does a negative impact on negative earnings mean? It means their future losses will be even larger than previously forecast, or they'll last for a much longer time. Let's translate that to an EPS number. We estimate this news translates to a 25% increase in their forecasted net loss for 2026. Viking was already projected to lose $1.83 per share in 2026. A 25% increase on that loss means an additional 0.46 loss per share. So, the estimated dollar impact on EPS for 2026 is an additional loss of 0.46. We look at scenarios. In a minimal impact world, maybe it's just a minus 0.05 hit. But in our most likely scenario, which we put at a 60% probability, we're seeing that minus 0.46 impact. And in a high-impact scenario, where this oral drug is severely crippled, we could be looking at a minus 0.90 additional loss per share. How did the market react to all this? The stock closed at $42.09 right before the news. After the announcement on August 19th, VKTX plummeted over 42% by day's end, closing around $24.33. This wasn't an overreaction. It was a rapid, brutal repricing. Investors immediately reevaluated their valuation given this major hurdle for a key pipeline asset. So, my final verdict on this news for Viking Therapeutics? This is unequivocally bad news. While the drug showed efficacy, the tolerability issues leading to that high dropout rate are a massive commercial challenge. It means the path to market for their oral VK27 is now far more uncertain, likely delayed, and its eventual market share could be significantly reduced. All of that directly impacts those crucial future revenue streams and exacerbates the current negative EPS trend. Given the substantial setback to a pivotal drug in their pipeline and the drastic repricing by the market, my take on Viking Therapeutics right now is a hold. For existing investors, the immediate flush has happened, and we need to see how Viking addresses these tolerability issues, especially with their subcutaneous formulation and the planned autoinjector transition. For new money, the risk-reward profile has dramatically shifted for the worse, making this a highly speculative play until clearer data emerges. That's it for this episode of Ticker Shock. Don't forget to like this video, subscribe to the channel for more market insights, and hit that notification bell so you don't miss a beat. Remember, I'm Dave, and this isn't financial advice, it's for educational purposes only. Always do your own research before making any investment decisions. See you next time.